Hi, this is Richard Flax at MoneyFarm, and we are talking about some of the things that have caught our attention over the past 24 hours. In the US yesterday, we saw a big jump in unemployment as measured by initial jobless claims. Interestingly, financial markets rallied after the data came out. And this again suggests that financial markets are already expecting very weak macroeconomic numbers from most countries in March, April, and probably May as well. The question again is, how long will all of this last? And when will we begin to see signs that economies are reopening at least a little bit? And we think that's going to be much more significant for financial markets going forward than the results of what will be pretty weak numbers in March and April. On the question of reopening of economies, the information so far is a little bit mixed. In China, we've seen the Chinese government put new restrictions on international travel, on flights coming into China, in an effort to prevent a possible resurgence or second round of infections. In the UK, we're seeing the government work very hard to try and find ways of measuring just how many people have already had the virus, been asymptomatic, or have recovered and have some measure perhaps of immunity. And having that greater granularity will potentially allow them to reopen the economy a little bit faster than they might otherwise have done. So having a better data and developing better tests can have a meaningful economic impact if they can get this right. Obviously, there are a lot of challenges and risks around that, but it's something we think that markets will look at as an indication fundamentally of how long the lockdown will last and when we'll begin to see economies slowly start to normalize. Elsewhere, we've also noticed, obviously, a very strong move in currencies. If you look at sterling, for instance, you saw a very sharp sell-off versus the dollar over the past couple of weeks, and more recently, you've begun to see sterling recover. Now, there are a number of explanations for this, perhaps, but one thing that we're interested in is the extent to which it shows that all of the efforts from central banks, particularly from the US Federal Reserve, has helped to provide more liquidity to financial markets, particularly more dollar liquidity. And we think that the rally in sterling, one interpretation is that it's a sign that financial markets are becoming just a little bit more stable from what was a pretty stressed situation a couple of weeks ago. And we think that's broadly speaking positive. So that's what we've been focused on. Thank you for joining us, and we look forward to speaking to you again soon.